Hey guys, this is Market Update. So I think over the next 6 to 9 months, all of the pieces are now in place for the rest of this bull market, and I'll show you why in this video. But there aren't really any questions anymore. The monthly chart right here for BTC, all-time high for the monthly, right? So the highest monthly close we've ever had. You go to the weekly, we're just kind of melting up higher and higher. The S&P's at an all-time high, the Nasdaq index is at an all-time high. Bitcoin is just floating up. Why? Inflation. The big beautiful bill is inflationary. We know exactly how much they're going to spend, and everyone's asleep because it's the summer. But think ahead to what's happening. The cycle is perfectly coming into place. So I just want to go through that in this video. Now, if you trade Bitcoin, check out Bybit below. If you click the link and sign up, make a deposit, they'll give you a deposit bonus all the way up to $30,000. Just click the link in the description if you want to go ahead. I think we have to keep buying Bitcoin here, though. 107,000 is nothing in the big scheme of things. Now, I've got some trades on as well. So I do have some short-term trades on, which I will be keeping until much higher levels. I do think we get there, and I'll explain why in this video. So as you know, I just dollar cost average as much as I can. That's spot, so I just keep that as savings and investments. But then I do have some short-term trades on. I think we go much higher, and I want to keep those trades on until at some point later on in the cycle where I'll probably get out of those, but not 107,000. Why? The BBB is massively inflationary. And markets are telling us that. So markets look forward, and all of the data that we're getting out of the government is purposely lagging. And I'll show you that. But markets are telling us huge currency debasement is basically the path forward. Markets are trying to price that in. Everything's at an all-time high. No one really feels excited at the moment because the real economy lags the market expectations of currency debasement and that flowing in anyway. But all of that is going to happen. There's no questions about it, right? The big beautiful bill is happening. It's passed. We know that the debt ceiling is being raised. We know that there's going to be multiple trillions of dollars of fiscal stimulus pouring into markets. Markets are telling us that. So just go with markets. There's no questions anymore. We don't have to predict. Markets are going to go higher. The dollar is going to debase. They're going to print trillions of dollars of deficits. So just buy assets, get out of the currency, get out of bonds, right? So Bitcoin and liquidity, this is the S&P, I believe here. But again, you can see that liquidity around the world and the Bitcoin price have an extremely high correlation. Liquidity is going higher. We've had the spending bill already, right? Tax cuts, and they're saying, well, we're going to earn a lot of money from tariffs and everything. They're a tax. They can offset some of the tax cuts, but we know the debt ceiling is going higher. We know that they're probably not going to balance the budget. Even if they do balance the budget, that will be coming in the form of huge investments into the states. That's still money and currency flowing in. The whole game here is currency debasement to, raise GDP, raise price levels so that you can take a higher amount of tax revenue, because the tax is a percentage of the goods traded. So you need prices higher if you even make a dent in, the government deficits. But if governments reduce their deficits, you still have to have currency printing. So you have to have private money creation and debt creation there as well. So either way, liquidity must go higher. We know this. And the BBB is part of that, right? Liquidity, currency debasement, that must happen. We are in that cycle right now. We're in that cycle. The BBB is part of that. And so we go higher in liquidity and therefore in Bitcoin as well. And if you're in the Nasdaq and the S&P, we go higher. But remember, we're at all-time highs. The market is telling us exactly what is happening right now, which is all-time highs because currency debasement is the way forward. And so Bitcoin valuation models here, it's going higher along with currency debasement, let's say 7 to 10%, and then adoption, which is another 7 to 10%. So you're getting your 20% plus, CAGR. And that's what I believe. So we're going to continue. But as you can see here, the Bitcoin price and money supply around the world, M2 money supply, is basically almost 100% correlated, right? As correlated as anything can be. A lot of people say that the money supply chart with Bitcoin can't predict the movements because it's a chart crime and you can't predict global money supply on a weekly chart like you can with BTC because the calculations are done every quarter, I believe. It doesn't really matter, right? These are like 98% correlated. So M2 is going up, right? The BBB is going to smash more liquidity into the market, which means asset prices go up. They're 98% correlated, something like that. You can very clearly see in white Bitcoin and in pink money supply, when it goes up, Bitcoin goes up. As you can see here, we're not in a huge regime of massive money printing yet. That's all to come, right? So the Fed still fairly, I mean, they're not hawkish, but they could be way more dovish, right? They could drop interest rates by 200 basis points. They're going to do that at some point. Is it September? Is it later on? Who cares, right? They're going to do it. They're way too high. Inflation is coming down. All of their fake metrics of inflation, purposely lagging, are coming down. The main input to inflation now is shelter, the shelter component, which is purposely lagging and will continue to disinflate over the next 6 to 9 months, which will give them perfect cover to say, well, we have to lower interest rates. And they're going to be lowering interest rates at a point where the BBB is starting to stimulate fiscal stimulus into the market. This is on purpose. Okay, this is the cycle. This is the economic cycle. The economic cycle is not a Bitcoin cycle or anything else. It's the cycle of currency debasement from government and central bank. In the US, what you've got now is the BBB being passed, the debt ceiling being raised, huge fiscal stimulus coming in, and the central bank at that point, let's say in a few months' time, is going to be starting to lower interest rates, which is stimulative, right? They want to stimulate prices higher. This is the game, right? They have to do that. This isn't a choice. You have an amount of debt that can't have deflation. And the whole point here is just debase the debt, right? Debase the currency. This is what they're doing. And they're not even there yet. So we've got their lagging inflation measures that are going to start coming down even more. And the Fed are going to then cut into a stimulus bill on the fiscal side. So that's going to create huge amounts of inflation, which is what the market is pricing in right now. Right, the market looking forward saying the Fed's going to cut or become a little bit more dovish, or do they even need to if they just stay the same? And the BBB is going to have stimulative effects. So that's why markets are at all-time highs. But you'll see inflation keep coming down, right? If the Fed get any more dovish at all, markets just go, right, much higher than this, right? So that's the timing of it all, right? Over the next 6 to 9 months, that is the rest of this bull market. We're not even in a huge stimulative kind of area right now, as you can see, but that could easily happen. It will happen because the BBB is right there. So another thing as part of the BBB is the complete debauchery of fiat currency. And this is what the Japanese do as well. The Japanese government actually prints their currency to buy their stock indexes. And this is to create inflation and to raise the price level, right? You need to do this because the whole system is built upon debt, which requires inflation, otherwise it goes insolvent. That if they didn't create this inflation, then you would see price deflation and all the debt going insolvent, right? So they are, of course, packaging it up in something that sounds very good. Every American born between 25 and 28 is set to receive an account with $1,000 from the US Treasury, which will be invested in a low-cost index fund. So this is what the Japanese have done as part of their QE infinity, right? Which is complete and total debasement of the currency to create inflation. Otherwise, the system collapses. This is what the US are now doing. Remember, the US Treasury is literally insolvent, right? I mean, they're not insolvent because they can print money, but they have no reserves, right? They have no currency. The only thing the Treasury can do is just create debt. So what we're seeing here is even more debt creation in order to buy stocks. This is crazy, actually. It's hard to say how crazy this actually is when you think about it. So even the US government is telling you that cash and bonds are utterly worthless. And they are literally going to be printing debt to buy their own stock indexes. So the hurdle rate of investments is now the S&P because the US government is printing cash to buy the S&P. So the hurdle rate for any investment and the hurdle inflation rate is the S&P, let's say 10% a year, 10 to 12% a year. So your investments have to make that firstly, otherwise you're actually losing purchasing power. So this is how they kind of wrap up, in a bow, basically complete and total debauchery of currency, right? The QE infinity, printing money to buy assets, pushing up prices, pushing up inflation, because they need that inflation to debase previous debt. This sounds like a good thing, but it is actually a complete capitulation, right? It's showing that the whole system of debt and cash is completely unreliable and untrustworthy at this point. They're printing debt to buy stocks. Unbelievable. So the rate at which we need to invest is at least 10 to 12%, and above that is actually our real rate of return. The S&P, the Nasdaq, and Bitcoin are at all-time highs. They're telling us what's going to happen in the future, but I can't emphasize enough the different data points and how they're either forward-looking or they're lagging. but they're all coming into one. So firstly, US inflation drops to 1.75%. This is trueflation. It's very, very accurate. They're saying the main drivers are food and beverages plus utilities. Look, it's all in place. Trump comes in. The Middle East have been able to invest trillions of dollars into the AI revolution in the States. So they've got a big equity stake in that. And as part of that deal, I assume that they have been told, look, we need oil much lower. We need to get inflation down. OPEC is pumping out huge amounts of oil, which they didn't do under Biden. They're doing that, and oil is at $60 a barrel, more or less, right? And so what you're going to get is huge disinflation continue, because a lot of companies will buy their oil and gas forward. So they'll buy forwards or futures, and they're locking in $60 a barrel or $65 a barrel right now, but they can use that in the future. So next year, the airline industry can reduce prices because oil and gas is cheap now. They're buying forward, so they can do that. Many other industries as well, right? That's the trade. The trade is, need to get oil down. We'll let you invest loads of dollars back into the States, into AI, so we'll give you some equity stake in that. That's happened. This is all coming down. Then you have the lagged component of shelter, which the Fed looks at in its PCE metrics. That's going to start coming down, and that's disinflating prices further. But the markets are telling us that we're about to get a bout of inflation because they're at all-time highs, right? When the market is forward-looking, when the Fed were drawing down the last bull market and raising interest rates, Bitcoin priced it in and went way lower, right? They were pricing in less inflation or deflation or disinflation. Now they're pricing in the next part of the cycle, which is huge amounts of inflation. The BBB, massively inflationary. Look at the credit cycle. We're not even peaking. This is when the Fed drops rates and sparks that credit cycle again. Credit creation, commercial bank credit creation, that actually puts more stimulative effects into the economy. That's when the PMIs start picking up above 50. You start to get growth, as they call it, but it's basically currency debasement, forcing its way into prices. That's inflationary. That's when people actually start to feel rich as well, when PMIs start picking up and more cash is flowing around businesses. When that happens, that's the inflationary episode that's going to start to come out eventually in, let's say, 12, 18 months, which is when the Fed has to start drawing things down again and you get the next bear market. But the markets are telling us that inflation is coming. The credit cycle is nowhere near its peak yet. You can see that the credit cycle is very, very closely correlated to Bitcoin bull and bear markets as well, right? And so when the credit cycle is up here and it looks like inflation is starting to pick up again, you got to be worried. But this is when people get excited, when the credit cycle is at its peak, when you've got the PMIs above 50 and everyone feels like the economy's doing well, a bit more cash around, people start buying crazy stuff, thinking they're going to be really rich forever, and Airbnb's up here, right? People are buying Airbnbs and saying, we're going to have 15 Airbnbs, and right, and then obviously market draws down and they realize that's not going to happen. Up here is when you take profits in your trades, not here. So over the next 6 months, not only do you have the fiscal stimulus, but you have the Fed potentially coming into that easing cycle because all of their inflation metrics are lagging. It's on purpose, but we know that that's going to happen. It doesn't matter if they cut 100 basis points or 200. They're going to cut at some point, and that's going to release some stimulative effects. And it's going to push PMIs up and manufacturing and service indexes. And when everyone feels rich, and when everyone's excited, and when Bitcoin's at 250K, and when everyone says it's a new super cycle, that's when you take your profits, right? Because that is when everyone is on the wrong side of it. We're not on the wrong side of it yet. People aren't excited yet, right? And so I think we're still good because this cycle is playing out perfectly. The Fed can cut and get easier, even if it's not huge amounts or whatever, it doesn't matter. They can go easier into the BBB, which is stimulative, which is what we're pricing in right now. And I think we just price it in for the next 6 to 9 months still. So that's why I've still got my short-term trades on and just think the next 6 to 9 months are still very, very bullish. And I think the cycle is just carrying on just like every other cycle, right, with all the noise around it. But if you're a longer-term investor, look, Bitcoin's CAGR is 30 to 40% a year. It's going to be very volatile, but if you invest through a couple of cycles, you're probably going to outperform most other assets that you'd want to invest in. This is Bitcoin versus the dollar. I don't think the dollar is the measuring stick anymore. Bitcoin is the measuring stick. So what we should actually do is invert this scale, because what we're measuring is, Bitcoin as the measuring stick, and is the dollar gaining value versus Bitcoin? The answer is absolutely not, right? This is just complete capitulation from the dollar. If we go into VNQ, which is a real estate index, kind of a real estate index, commercial real estate mostly, and cell towers and everything, do you want to invest in real estate or Bitcoin? real estate is crashing in terms of Bitcoin. So the measuring stick is Bitcoin. What is outperforming Bitcoin, right? You have Bitcoin versus DBC, which is a commodities index. So if you want to buy commodities over time, buy them with Bitcoin because they're getting way, way cheaper. And then this is BTC versus the NASDAQ index. Now, the NASDAQ index is probably the thing that most people would invest in or basically get all the returns from, even if you're in the S&P, the same companies are giving the returns that are in the NASDAQ, right? But this is crashing versus Bitcoin as well. The NASDAQ is an insane index, right? The NASDAQ index, you can see here, the compound annual growth rate has, over the last 17 years, has been 15% a year. Absolutely fantastic returns. Now, unfortunately, Bitcoin's CAGR is much more than that. In the last cycle, it was anywhere from 30 to 50% a year. What we're at now is around 30% CAGR, right? So this is a 4-year CAGR. Look, Bitcoin isn't one risky stock. It's an index itself. So you've got one index annualizing at 30, 40%, the other index annualizing at 15%, right? And so Bitcoin is the play, right? It is the play because it's not a risky stock. It's an index. And it's annualizing much more, right? So 8 years of investing in Bitcoin, you're going to be outperforming virtually everything else, right? If you're a long-term investor. So again, that's why the vast majority of my funds are just dollar cost averaging into BTC and short-term trades because I think this cycle goes much higher. If you trade Bitcoin, check out Bybit, click the link below, sign up, make a deposit. You'll get a deposit bonus to trade with. The crypto course as well, if you want to know exactly what I'm doing with my trades and macro updates, I give for free for existing users. So if you have the course, all updates come for free forever. Macro updates, cycle updates, what's happening and what I'm doing as well. Private Discord groups if you want to ask me questions. I'll link that down below. I'm James, this is Money G. Cheers for watching and I'll see you in the next one.